Welcome to Impact, the California MBA podcast, where we break down the legislative and regulatory issues shaping the mortgage industry. I'm Paul Gigliotti, CEO of the California MBA. Today, we're focused on a proposed California Community Reinvestment Act, also known as AB 801. Why it matters, why it stalled this year, and why lenders need to stay engaged heading into 2026.
Yep.
I'm joined by a good friend of mine, a fellow colleague at the California MBA, Chuck Iverson, CEO of Mason Mac Mortgage, a longtime California MBA leader. Chuck has spent decades running mortgage operations in California, production organizations, and understands both the business and regulatory realities of this bill. Chuck, thanks for joining us today.
Thanks for having me on this important issue.
So let's jump in and get to all the good stuff right away. So my first question for you, Chuck, in simple terms, how is the proposed California CRA different from the federal CRA most people are familiar with?
I think it's important first to state that this isn't about denying consumer protection or not advancing consumer protection. The authors of the bill are definitely concerned about their constituents, as all Californians, about making sure that they have access to credit and to, the future we all want for our families. However, there are big differences between the federal CRA, which is for federal banking institutions, and the state-led CRA, which would also apply to independent mortgage banks, and they're very, very different organizations.
Yeah, absolutely.
Well,
I mean,
if you'd like, I can elaborate on that. The banks obviously collect deposits and they have assets to deploy, and they do that often not just in consumer residential loans, which primarily are not portfolio bank products. They do it through small business loans and other ways to help their communities. And there's an initiative to make sure that the banks are equal in all the different communities they serve. They also can open up branches and get into different communities and different geographies very intentionally. IMBs only do residential mortgage lending. We operate on a completely different business model, different product set. We have no other products other than mortgage loans to offer. And the way that we distribute that, our products to the communities, is through loan officers. And it's very hard to recruit loan officers, very, very competitive. And so therefore, it's very hard to say, I'm going to serve this particular community with any kind of confidence, really.
yeah. Well, so and those are brilliant comments, because within your comments, you're also sharing with our audience the difference between an IMB, independent mortgage banker, and a large retail bank, like a large mortgage
Yes.
banking institution. And those differences really help us be able to focus on what our next question is. And that is, as I said in my opening remarks, you've run mortgage operations for years at multiple well-known organizations, and now you're running, Mason Mac as the CEO. Practically speaking, what does adding a state level CRA mean for IMBs?
Well, not to focus on the negative, but I'll talk about the negative. It really just means risk and expense. So again, while very well intended, IMBs, as we'll talk about maybe in a few minutes, are the primary source of loans for underserved communities. To have a regulatory action and responsibility around that is a whole nother level that you have to comply with. And so first off, just the compliance, the reporting, and the measurements, which are very foggy at this point in time, and maybe very difficult to comply with, can be expensive. And then you have risk from your regulator of not complying with them, of course. But the hidden risk underneath all of this is onerous lawsuits. Once this is enacted, I guarantee that there will be a whole cottage industry around lawsuits around this particular topic, and that's a risk that is very hard to budget for, it's very hard to reserve for, and frankly, I think it'll drive lenders out of California in some cases.
Yeah. And if you drive lenders out of California, that's a lot of business leaving the state, but also a lot of individuals who have boots on the ground understanding lending within California. It's quite different. Now, you alluded to this, and I want to come back to it because it's very important. I think it's impactful, no pun intended. You were talking about the data, and that's a big portion of this debate, whether or not this bill belongs at a CRA belongs at a state level in the state of California. And some of that data is really compelling to me. IMBs already originate 84% of the loans of low to moderate income borrowers, LMI, and 70%, 73% of those loans are to minority borrowers in California. So, what does that tell you about whether a new CRA mandate is actually needed?
Well, I think it informs at the very least. In fact, I would say it's our depository partners out there, the banks and credit unions that don't participate in these lending programs, these high LTV programs, these down payment assistance programs, many of which the revenue is restricted on, and so they're not profitable, but we're entrepreneurial and I'll use the word scrappy, and we want to get out and serve every borrower. And so we really participate in those loans, and then we're more nimble than banks. I mean, they have legacy architectures, bureaucracies, risk management, and so I think it's important. I think I can see the case for the depositories on a CRA basis, but with an IMB, I think that we're already basically in there swinging and trying to help these
Right.
communities out with these products.
Yeah, those are some strong stats. It clearly shows that IMBs like Mason Mac are in there doing what is needed for the right reason.
Yeah, I think you
Um,
had the statistics, right? It was because I don't think you mentioned. Did you say it was 84%?
yeah, 84% of IMBs loans that are originated in LMI areas are 84% of them are closed by IMBs.
Yeah.
Yeah, that's a huge percentage. It's almost the
It's
entire
actually
pie.
I'm very proud of that. We've had on the California MBA, we've had various studies and committees to really help out, underserved communities to really get out there, and it's all IMBs that are participating in those, and then when you really step back and look at it, we're the ones who are distributing those things, and it's something I'm proud of.
Yeah. So my next question relates to the consumer. So at the end of the day, the legislative bills that come to the table are there to protect the consumer, right? And so if the California MBA wants to come back to the author of that bill, this the specific author and showcase, you know, how it's actually not protecting the consumer, how it might harm the consumer, that becomes a vital point in communication for trying to get the bill changed or trying to get the bill to not move forward, right?
Yeah.
If this bill moved forward as drafted, how could it impact borrowers, especially affordability and access to credit?
Yeah. Again, I applaud the intentions and the efforts, um, and think there's intelligent ways to go about this. Um, but um, the cost and the risk, which every business owner needs to, assess in their business strategy, are very unknown in this. And the when you compare that with the gain, as you said, 84%, of the underserved community lending is already coming from IMBs. You have to question where's the pickup for both the cost and the risk. And independent mortgage bankers are small businesses in many cases. There are all kinds of different shapes, some based in California, some based outside of California, some are national in scope. And we all have somewhat different capacities to meet these requirements. And so I believe that there will be less lenders competing for the consumer's loans, which, is not good for consumers. I mean, we want competition. We want people out there really trying to serve these communities and competing for that, and we want a lot of lenders after it. So, let's find ways actually to incent and not de-incent. Going that way.
Right, right. Absolutely. Chuck, if lawmakers remember one thing as this bill comes back in 26, what should it be?
Well, can I say two things? How's that?
You can say two things. Absolutely.
Yeah. Yeah, because at first I think I I did question the gains versus the costs and the risks involved. And I would ask that we be allowed to educate everyone about the work the IMBs are already doing. California MBA is the way to do that. We have policy experts that can help help our partners in the legislature understand the efforts that we have going on, and more importantly, the results. And then secondly, I would just say the word clarity. If it is deemed that um, there is a necessity for further regulation, I would really, really ask that the industry itself is engaged and that the ideas that are put out there are clear, measurable, and we have an ability to meet them in a way that um, won't increase our risk of lawsuits or being out of compliance inadvertently just because of opaque legislation.
Yeah. Yeah, those are great thoughts. And that brings me to, I will say participation is key. We have our legislative day coming up in March 3rd, which is
Looking
another
forward.
great way to participate. It comes at a crossroads where advocacy no longer becomes, a conversation about politics, but advocacy becomes a conversation around strategy and how you run your business and how you empower your team and your consumers. From my perspective, the reality is independent mortgage bankers, IMBs, are already the primary source of credit in unserved communities in LMI areas. And any policy that increases costs or reduces flexibility brings risk doing more harm than actual good. At the
Yeah.
California MBA, we'll continue working with lawmakers to ensure the future proposals are guaranteed and grounded in data, operational reality, and real consumer outcome. Chuck, I want to thank you so much for your participation in California MBA, for being such an advocate of the association, for your years of dedication and service to the industry as a whole, and for joining us today on Impact and helping bring clarity to this issue.
Thank you, Paul. It's been my pleasure. Have a great day.